What's up, guys? Welcome back to Modern Traders. I'm Ben, your host. Today we're discussing NanoDemension, the requested video group. And if any of you have companies, sectors, just any topic that you want to see a video on, just add it to the comments or send me a message in the group and I'll get one made for you. Now, NanoDemension, the 3D printing company, Broadview. More specifically, they have a proprietary system, Dragonfly, that sets them apart. Now, 3D printing in general is going to be important, especially in the upcoming, just soon to be massive space industry. But with NanoDemension, you're able to bring the 3D printing in-house, which is very important to every industry, especially in the aerospace, defense, anything with government contracts. But there's applications you see with the aerospace industry, defense industry, which is just a massive money-making industry. Anything you can get involved in defense and government contract can add value to any. Medical applications, it's limitless with the printing necessities in the medical industry. Automotive, especially with the EVs, these are all just the main focuses right now. Just the hottest sectors. Let's get his hands in all of them. Now, the Dragonfly, their proprietary system, the precision additive manufacturing system, is what sets them apart. It gives companies the ability to bring their 3D printing in-house, where up until recently they would have to send it out and adding a lot of time to the process. See, the manufacturing platform around the clock 3D printing is the only one comprehensive system available right now. Dedicated nano-inks optimized 3D software to print electronic circuits such as printed circuit boards, antennas, capacitors, sensors, what have you. Now, what sets them apart and what makes this such a big opportunity, in my opinion, is that all of these factors make this company key and pretty much a shoo-in to be involved with the ARC ETF for the space industry that's coming up. And it's basically what's caused this to take off in the first place is ARC's interest in it, which always creates a hype effect for any company. But this one just has so much potential. It's, I personally, I think it's probably better for a long-term play just because of potential with the ARC ETF, but, short-term as well, easily 100% profit to be made as soon as the uptrend starts back up. So this enables on-site prototyping a matter of hours instead of weeks. Eliminates the need for large orders, sending out. It also enables the ability to discover design errors in the early development stage, which is obviously another huge time saving. And you're able to have 24/7 access to the 3D printing. You can add automation if it's necessary. You're able to do it in-house, incorporating complex geometries, component consolidation, confidentiality, again, super important for the defense industry, and it also eliminates a lot of environmental impact of outsourcing. And like I said, this is the main selling point here is going to be the involvement with ARC and their space ETF. One issue to keep in mind, they do have a habit of direct offering when the price runs up, and of course short term that's going to cause typically causes the price to drop. People get scared, they don't like the dilution, but more long term, if it's being done correctly, the money be put back into the company, which causes the company to be more valuable back and forth. Every time they do a direct offering, if they're using it correctly, it's actually a plus. It's a benefit in general. Like I said, with this direct offering here, the company intends to use the net proceeds for working capital, other general corporate purposes, strategic opportunities, business combination transactions. And these are all factors that make it a positive thing, especially where ETFs are concerned. But I'll let Kathy explain it to you.
NanoDemension actually is, it used to call itself a 3D printed circuit board company. Now it's broadened its view of itself, defining the market to a 3D printed technology device company. It's getting incredible business from defense agencies around the world. It's an Israeli company. We always look for where the defense is putting their money, where they think a technology technology is highly differentiated, and we get to know the company which we have, and we're very impressed with the new management. The founder is still very involved, and as is usually the case, company's founder is into the tech and really needs to bring in business partner, which he has done. So we're very excited.
Well put, Kathy. And taking a look at the graph, you can see it's on the 1 year, it's trading in the 50-cent range, you know, just a penny stock. And then just a technology boost, you know, it's news came out that they had a little bit of breakthrough in their development of the Dragonfly system, which caused a quick 400% run up. And then they did do a direct offering, as they are wont to do, which caused it to cool off. It was sideways for quite a while with no new catalysts. And then right about here, you see, right about here in it was a late October, early November when ARC started to show some interest, and obviously that's going to hype it. And it runs up pretty quick, a little over 2x. And then direct offering, like I said, they do have a habit of doing, which causes it to cool off. But the share dilution actually makes it easier for ETFs to start buying them up, which, again, ARK Invest keeps doing, which keeps causing the hype. And it's just a hype cycle all the way up to about $18, another direct offering. And, you know, even the direct offering immediately runs back up. And then, of course, the overall market starts correcting, which brings every company down. And they bring more than 50-60% down, bringing you just an excellent opportunity for a buy-in at a $7-8 range, all the way down from 18. And like I said, this is a play that can be short-term or long-term. In the short term, I personally see it at least 2xing immediately upon the correction being over. If as soon as the market starts to show an uptrend, I'd say this would just pretty much in a matter of a couple days return to $15-16 range. So I mean, even an entry right now, you know, in my opinion, you're seeing an immediate 100% profit on a short-term play. And more long-term, I mean, it's just an excellent buy and entry to start a long-term position at the $7-8 range. Now, like everything in the market right now, it's not to be just jumped right into. I mean, unless you are starting a long-term position and you have the capital, then yeah, I mean, start it up. You know, you can just keep adding to it if it does have some more downside. It has started to show a little bit of an uptrend, though. So the more defensive, safe way to play it is to identify support and resistance levels and play it accordingly. Right now, it's right at the 775 resistance, which I do anticipate it breaking and holding above. But if not, if it does get rejected at this resistance level, then want to keep an eye on the next supports. We're gonna have a support right around the $6 range. If it has some more downside, we'll be looking at that to hold. If it's not able to hold the $6 range, it'll be another support right around $5.25. And I really don't see it getting any farther down than this. So probably irrelevant to look any farther, but you know, keep an eye on those to hold. Once if it does drop to those support levels and you see it actually hold and start back up, got a pretty good indication that that's the bottom and it's a good entry point. Going forward, if it does hold at 775, we got resistance right around the $8 range, $8.50. You can have another resistance right around $9. Get a little bit more of a close-up view here. So we get the resistance right around 9, and then there's always going to be a psychological resistance at the $10 range. It's just a nice round number. So looking at all those levels, and I don't see it having any issues. It might actually start independently, right, going up this cycle. But once the market does show the reversal and uptrend, it should go just shoot up through these resistance levels. And then you're going to have a big resistance at 15, which short term is an excellent time to take your 100% profit, and long term, if it breaks a 15 resistance and keeps going up, and that's probably a good indication to add to it. But anyway, like I said, this is an excellent opportunity along with dozens of others in the market. And if you have any suggestions for videos, anything you want me to cover, send me a message, put it in the comments. And as always, before I go, make sure to invite you over to the Discord. We always have a good conversation going, a good group of guys. I think we're a little over 100 at this point. Keep a list of resources for all the free members, news catalysts, upcoming opportunities. Like to keep earnings updated, ARCs trades on a daily basis, FDA approved, what have you. We do have a premium membership where we have a team of 6 guys there doing call-outs, contract call-outs, swing trade call-outs, with a daily watch list of best opportunities coming up. I like to keep the promising SPACs updated, especially the safety SPACs. And we do believe in giving back to the members, so we have monthly prizes, giveaways, contests for both the free and premium members. So come check us out. Until next time, I'm Ben, and this is Modern Traders. Thanks for stopping by.